weekly one-page sheet containing a list of trades. It grew in popularity until its following became too large and unwieldy, causing Wyckoff to seek privacy. He ended the publication in 1917 after achieving the largest following of any individual on Wall Street since the 1890s. Wyckoff did not drift into obscurity. He wrote several more books. The Ticker was transformed into the Magazine of Wall Street, with which he was heavily involved until declining health forced his retirement in 1926. In the final years of his life, Wyckoff returned to the idea of educating the public and conceived a Wall Street College. His health dictated a less monumental effort. In 1932, he turned his attention to a course explaining his method of trading in stocks. The original course was divided into two divisions. Division 1, a course of instruction in stock market science and technique, and Division 2, a course of instruction in tape reading and active trading. Wyckoff died in 1934. Since 1934, the Wyckoff course, as it is known, has preserved Wyckoff's place in the pantheon of market masters. Thousands of traders and investors have taken the course, which is still offered today by the Stock Market Institute in Phoenix, Arizona. Over the past 80 years, the course has been modified and updated to accommodate changes in market conditions without disturbing Wyckoff's original work. It contains the specific details of Wyckoff's trading analytical methods. His chapter on determining the trend of the market by the vertical bar chart of the New York Times average of 50 stocks captures the essence of his work and provides the guiding light for my book. Many students who take the Wyckoff course today focus on the models of accumulation and distribution. Wyckoff never devised such an interpretation of accumulation and distribution. They were added after his death. He certainly discussed some of the features of market behavior that were incorporated into these models. Accumulation and distribution are taught today as behavior revealed on bar charts with volume. Yet when Wyckoff mentioned these terms, it was mostly in regard to point and figure charts and never with specific components. It is my opinion that these models were created by his former associates to add specificity to the course. As expressed in his autobiography, Wyckoff wanted to teach students how to develop a trader's feel, intuition. Specificity sells better than intuition. It's more tangible. I believe there is too much dependency on recognizing patterns of behavior rather than on the art of reading bar charts. These patterns can quickly become cookie prints, like geometric formations, into which price movement is stuffed by those looking for a quick, no-think fix. They lead to rigid rather than creative thinking. They often frustrate the new student of Wyckoff analysis who might not realize the world of chart reading is gray, not black or white. One has to have an open mind rather than being fixed on a preconceived ideal. While the metaphors created by Bob Evans, a famous teacher of the Wyckoff course, describing springs, upthrusts, ice lines, and so on, are colorful and instructive, Wyckoff never used such terminology. However, that does not make them forbidden or useless. On the contrary, they are very helpful. Wyckoff was first and foremost a tape reader. As the markets grew more robust and volatile, he applied his tape reading skills to bar chart reading, where emphasis is placed on price range, position of the close, and volume. Wyckoff obviously knew the importance of trend lines, channels, and support resistance lines. However, they are given greater coverage in the modern course. I have borrowed from Wyckoff's original writings as well as the concepts of Bob Evans. My approach, which incorporates price range, close, and volume, also utilizes what I call the story of the lines, that is, the story of the price, volume behavior as framed and interconnected by lines drawn on charts. The lines bring the price movement into focus and guide one toward the behavior that prompts action in the market. Thus, I am trying to find trades on charts rather than figuring out if accumulation or distribution is taking place. A real gold mine.